Hey guys, welcome back to another weekly market update and forecast. I hope you guys are hanging in there, keeping your trucks moving and shaking those brokers for as much money as humanly possible in the current market. If you're new to my channel, welcome. I teach about the trucking industry with a heavy focus on the spot market as well as freight market analysis. So if this is a topic that interests you, feel free to subscribe down below. All right, let's get into it. Let's take a look at what happened this week in the market and what we can expect next week and where the areas of opportunity lie. Ready? Let's go. Now, two quick things before we start. Number one, I will be doing a live Q&A this Sunday at 4:30 p.m. Eastern. So if you have any questions, you know where to find me. Number two, I was sent a petition to sign regarding broker transparency and the current market situation. So if you're interested in signing it, it will be linked down below. As always, all of these charts will be attached down below so that you can see them better. Now let's start with the general overview by looking at the outbound tender volumes versus outbound tender rejections. Now, if you're new to this channel or if you are not familiar with those terms, tender volumes, the blue line, show us how much freight there is in the market. Tender rejections, which is the white line, show us how much of that contract freight is being rejected and therefore ending up on the spot market. Now, tender rejections, the higher they are, the higher the spot rates are usually. So this chart looks at these two numbers year to date, right, from the beginning of the year. And what we can see if we look closely is that this week, volumes have dropped a little bit. Now, if we look at the year to date, the big picture, we can see that even though volumes did drop this week, they are remaining relatively stable since the beginning of the year. And this is a really good thing because when volumes start drastically dropping, they start pulling those tender rejection rates down with them and therefore also the spot market rates. Now in white, we have the tender rejection rates and we can see there was quite a drop since the beginning of the year, and this is normal. In the beginning of the year, because we're coming off the holiday season, the tender rejections are usually higher, and this is because no one's really working, right? And currently, which is right here, here is March, we can see that tender rejections they're kind of struggling. I mean, they're all over the place. They're a little bit erratic. Currently, tender rejection rates are at 3.58%, which means only 3.58% of contract loads are actually getting rejected and ending up on the spot market. Now, for those of you who have been watching these videos for a while, you know that I keep talking about February 15th, which is right here. I believe, and I keep saying this, I believe that February 15th was our rock bottom when it comes to tender rejection rates. Since then, they have increased, but have been really erratic. Now, something I'm noticing right now is that it looks like we did hit the bottom with tender rejection rates on the 15th, but it looks like we're going to be stuck at this bottom for a little longer than I had hoped previously. Now let's look at equipment-specific outbound tender rejection rates, right? Actually changes from last week. So we're going to be looking at vans in blue, then we have flatbeds in green, this line, and the reefers are in white. And the percentages show us how much tender rejections increased or decreased from last week. Surprisingly, and I was really surprised, flatbed tender rejection rates dropped by 11.3% from last week, which I think is a fluke. It all happened within one day from the 21st to the 22nd. Now for reefers and dry vans increased by 3.2% and reefers by 2.1%. Now the good thing about the dry vans and reefers, they have been stable. There weren't any crazy ups and downs, and stability is predictability, so it's a really good thing. So let's go ahead and look at some specifics. Unfortunately, Sonar still doesn't provide data for flatbeds, but I did find this chart, which is actually free to use for anyone, so I'm going to link it down below. It's a heat map, and this is for flatbeds. This particular one shows us volumes, and it shows us whether volumes are above normal or below normal. Now, if you're wondering what do they mean by normal, I'm going to quote this from FTR. FTR examines historical seasonal behavior and normalizes the data to represent how the trucking environment would look in a growth economy. So what we can see here for flatbeds is when an area is orange or red, that is above normal volumes. Now, Florida doesn't count. It's null right here. So Florida, we're going to discard, but we can see places like North Dakota, Minnesota, Iowa, we have Louisiana here, Nevada, those are all showing above normal volumes. Now the gray areas are the normal volumes. Everything that's blue is below normal. So in general, this map is blue, which shows us that volumes for flatbeds are, as of March 20th, for the most part, they are below normal, which is not surprising. We'll see if that changes once the weather starts warming up. Then we have the same map, but this is for flatbed rates and whether they're normal, below normal, what's going on here. So for the most part, which was really surprising, for the most part, it's gray. Gray means that it is normal, plus or minus 10%. There are some below normal markets. Utah, we have, I believe this is New Hampshire, but Texas, California, these areas, they're looking like they have above normal rates. Now, one of the things I was really surprised to see here is the California, because the last time we operated a flatbed, we got stuck here and the rates were horrible. So it's nice to see that it's waking up a little bit. All right, now let's take a look at dry vans and we'll start with the volume data. So what does this map mean? The colors show us how much volume increased or dropped over the last week. If it's blue, there was an increase. If it's red, there was a decrease. The height of an area shows us the general volume in that particular market. And again, this is for dry vans. So what we can see is that this map is all over the place. One thing I see right away is that it seems like the West Coast is actually seeing an increase in volume. Jacksonville as well. Vermont, Maine, we have Maryland and Delaware are experiencing an increase in volume. The Midwest is starting to experience an increase in volume. Now, Texas saw a drop, but volumes, they only tell us half of the story. This is something I keep repeating. In order to understand what is going on with the market in terms of rates, we need to look at tender rejections. So this map for the dry vans shows us tender rejections. The color shows us whether tender rejections increased or decreased from last week, and the height shows us the general tender rejections in the area. I was happy to see that the map is very blue. I mean, there are some red spots here, but it's very blue, including the East Coast, Florida, the Southeast. Texas is showing promise. But let's go ahead and take a look at where you need to be if you have a dry van to grab those opportunities next week. So this map looks at general tender rejection rates versus volume. And the goal is, of course, to be in places where there is high volume, so you have loads to choose from, and high tender rejection rates so that the rates are good. Now, what I did was I added some numbers only for places where the rejection is over 10%. And what we can see right away is that the best place is Louisville, Kentucky. And Louisville, Kentucky has a rejection rate of 14.38% and volume of 64.32. Now, another interesting market is Colorado. The rejection rate is about, 12%. The volume is really high here. So that is an interesting market. Nebraska's okay. South Dakota, the volume is very low. It's only 18.04%. Wisconsin is not a bad market, and also Evansville, Indiana. Now, another thing we can see right away is that the West Coast is flat, it's dead. There are no tender rejections here, and they didn't change from last week. So West Coast for dry vans, not a good idea. East Coast as well. Florida, Maine, Vermont, New York, Pennsylvania, it's a bad market, Georgia as well. So it looks like everything interesting is happening in the middle of the US. One thing I have never shown in my other videos is the Headhaul index, and this is for dry vans. What does it show us? Well, it shows us the difference between outbound volumes versus inbound volumes. So the difference between how many loads are going out of a market area and how many trucks are delivering to that market area. So if the area is red, that means there are more trucks coming into that market area than there are loads coming out. Basically, overcapacity. Blue is the opposite. And what we can see from this map for dry vans, overcapacity everywhere. It is pretty much red with some blue kind of blotches. Look at Florida. There are a ton of trucks going into Florida, but not much volume coming out. And this is what is causing those rates, right? There's just too much capacity in the market. Now, if you're looking at this, there's some blue areas, for example, Georgia, South Carolina, parts of New Jersey, Ohio, Michigan, Colorado. But the thing we have to remember is deadhead. If you're delivering to a market like Pittsburgh, Pennsylvania, right here, you will likely, because of the overcapacity in this market, you will likely be deadheading to Ohio. But the problem is this map won't register it because you are deadheading, you're not on a load. So while this map shows us the general issue with capacity and which way capacity is moving, what it doesn't take into consideration is all the deadheading the carriers have to do, especially in the past few months. On to reefer volumes, and honestly, I'm not even surprised to see that this map is red with some spots, some small spots of blue, but in general, it's red. This shows us that reefer volumes have pretty much dropped across the board. And honestly, booking reefer loads this week was worse than getting a root canal. It was impossible. And the amount of van reefer loads there are tells me that there is an issue with volume for reefers right now. But now let's take a look at tender rejections, right? So for tender rejections, one of the things that makes me a little bit hopeful is that it looks like the Midwest is coming alive again. Now, in terms of the Pendleton market, which includes places like Yakima, Grandview, Prosser, Washington, the tender rejections actually dropped from last week. So that means that you will not be seeing rates as high as they were last week. But where should you go if you have a reefer? Well, the best market, in my opinion, is Fargo, North Dakota. The rejection rate is at 17%, and the volume, it's not high, but it is there. Now, in Bismarck, North Dakota, right here, rejection rate is 20%, which is really, really good. But the problem is that there is no volume there. Another decent market is the Omaha, Nebraska area. The rejection rates are lower, but the volume is there, so that is interesting. In terms of the Pendleton market, rejection rates are at 12%. Houston is 11%, but basically I'm showing here only those places where the rejection rate is over 10%. So you could potentially get decent rates in these markets. So Houston, we have Missouri, we have Omaha, Nebraska, South Dakota, North Dakota, specifically Fargo. Don't go to Bismarck. There are no loads there. And of course, Idaho and the Pendleton market. So now for the Headhaul map for the reefer, we can see it's not as dire as for the dry van. There are some blue areas, for example, Idaho, Central California, the Dallas, Texas area, Midwest, we have even New Jersey right here, Indiana. These are places where there are more outbound loads than inbound trucks. Now the Southeast, it has too much capacity. Clearly, it is red. Now, realistically, the biggest problem for reefers right now, except for overcapacity, is the lack of volume. Because I see, again, so many van reefer loads posted. And I'm starting to wonder, could it be because some of those beverage loads, because the weather is warming up, those beverage loads no longer need to be protected from freezing and therefore are going on dry vans more and more? Just a thought. Let me know what you guys think. Then we have trucks in the market. This map shows us the driver behavior or carrier behavior. It shows us whether trucks left a particular market or increased or went to a particular market. And unlike last week, I do see a pattern. You can see that Arizona, Texas, Florida, there are trucks coming in here. And I am thinking it's because, especially Arizona, there is the proximity with Mexico produce season, so maybe trucks are flocking there. Also, the Midwest is seeing a ton of increases. Now in the Southeast, there was a decrease in trucks, and Central California also saw a decrease in trucks. And even though Central California is the place where all that produce is grown, unfortunately, the weather has not been helping much, has it? Okay, now on to diesel prices. And of course, I'm always happy to let you know that diesel prices are still on their way down, and they went down pretty aggressively from the 18th. Currently, we're at $4.32 per gallon, which is really, really wonderful. Now, if we look at this chart, which shows us the market areas and whether diesel prices increased or decreased, for the most part, it is red, which means that in most market areas, diesel prices went down. But Minnesota and Arizona actually did see an increase in diesel prices from last week. But in general, it's red. I like it when it's red. Let it stay that way. Well, guys, there it is. Honestly, this week has been particularly difficult for my reefers. As I said before, something I'm noticing more and more is that there are a ton of van reefer loads, which means they can fit both on a dry van and a reefer. They're not specific to a reefer. And there's actually a very small amount of reefer loads. Volumes have definitely dropped this week, and people are just scrambling to book whatever they can, regardless of where it's going or how much it's paying. It's pretty horrible to see. For dry vans, the situation was not as horrid as for reefers, surprisingly, but it was still pretty tough. One of my guys got stuck in Bedford, Ohio, and by some miracle, I managed to grab a one-day load, paying $2.18 per mile to Indiana. It's insane. It wasn't a great rate, but it's all relative. All the other rates were paying like $1.80, $1.70 per mile. Anyway, guys, I know that we're all struggling. I'm sure you guys have already seen the video of the vice president of FreightWorks talking to her team about shutting down the company. I'm sure you have heard of the carrier in Florida that shut down their company unexpectedly, leaving 455 drivers jobless. But this is the market. It is cyclical, and unfortunately, as horrible as it sounds, this is part of what is going to make a change in the future, right? But in the meantime, while we're waiting for that market to flip, strive for those higher rates, be patient, and take more time on the load board if you're working off the spot market. I'm wishing you guys an amazing weekend, and I will see you all live this Sunday at 4:30 Eastern. See you then.